If you think buying a house is the smartest investment, think again. It could be the biggest financial trap of your life. While everyone's rushing to own property, they're missing the hidden mistake that could cost them big time. In this video, we are going to tell you why buying a house could be one of the biggest financial mistakes you'll ever make. From hidden costs to missed opportunities, we will expose the harsh reality behind home ownership that people barely talk about. So save yourself from the trouble and learn the truth before locking yourself into a financial trap. Stick around till the end as we reveal smarter ways to grow your money instead of sinking it into a house. The investment nightmare. You know what? I think this idea was created probably in one of those sessions where someone said, "Hey, let's build the worst possible investment." I mean, come on. It drains your cash reserves every single month. It's hella illiquid. It's insanely expensive. It's complex. It's riddled. It barely generates any returns. And of course, it's leveraged to the mix, meaning if it even dips, boom, you're screwed. Now, this is not just some made-up dramatic stuff. These are just brutal facts about home ownership. Okay, no need to get confused. Let me explain. The drain on your wallet. To be very honest, a house is basically designed to be a relentless money sucker. Like, imagine if you are just chilling out there and someone drops the "buy a house to build equity" line. But wait, if you really break it down, your house is like a money pit with non-stop costs. Just think about it. First of all, you have to pay insane upfront costs like down payments and closing fees. And then every month, you have to fork over a mortgage, pay property taxes, and shell out for insurance. And guess what? You don't even get a single dime back like you get dividends from stock investments. And on top of that, every year, you have to cough up maintenance fees, sometimes around 1% of your home's price. Even a child would know that that's not how smart money works. As one might put it, if you invest in something that only grows around 1% higher than inflation, you're seriously missing out on the real gains you could get elsewhere. And even if your home's land might appreciate a bit, the actual house structure just keeps getting older, more worn, and more expensive to fix. It's like buying a new car off the lot and then watching it depreciate the moment you drive off. And even if the structure never appreciates thanks to the leverage of mortgages, people convince themselves that small price increases mean big wins. But isn't that just a state of risky business when rates rise? Renting versus owning. Alright, now let's talk numbers. In a lot of spots across the United States of America, renting is actually way cheaper than buying, at least for the first several years. Now, I don't know how things work where you live, but let me hit you with some average details. So the average rent is around $1,500 a month, but if you buy, it comes with almost a $400,000 price tag. And not just that 30-year fixed FHA loan at some percent of your monthly payment, it can hit about $3,000. And that of course includes taxes, insurance, and maintenance as well. That's literally double the rent. While renting lets you free up cash to invest in other places that grow your money, buying does not. Let's take stocks as an example. If you are renting a place, then you can use your free cash to invest in stocks that have historically returned around 10% per year. You know, if you had invested $100 in the stock market back in 1960, it would be worth over $30,000 today, while real estate would barely cross the $1,000 mark. That says a lot. An unproductive asset. My apologies for being harsh, but a house is just an unproductive asset because it just sucks money out of you, literally every month. I mean, productive investments are the ones that put cash back into your pockets, like stocks or bonds, because they give you returns in the form of dividends. But a house? It literally doesn't do anything for you. It's like having a gadget that needs constant charging and repairs without ever giving you any benefit. Your primary residence is not generating any income. It's just a liability on your personal balance sheet. Sure, rental properties might pull in some cash, but once you move in and claim it as your home, it stops being a moneymaker and starts being an endless expense. A full stop to diversification. Another major bummer about buying a house is that it literally locks your money into one single asset in one location. Like, imagine having almost all your net worth tied up in that one property. Isn't it like putting all your eggs in one basket? Now, what if a disaster strikes your neighborhood or the market in that area tanks? Boom, you're left with a wrecked nest egg. Most homeowners have their entire financial future riding on the appreciation of their property. And if that area does not boom, or worse, takes a nosedive, then all their other investments are basically left hanging in the dust. You really wish to be in that position? Plus, when it's time to sell, you will be stuck in a geographically limited market. It might take forever to find a buyer, and that delay just means more money lost in the process. Insurance and taxes nightmare. Okay, so when you're buying a house, you're basically signing up for decades of paying property taxes no matter what. Not only that, but the local government is set to make a neat 2% a year on your property's value regardless of what you earned. And please, don't even get me started on the real estate brokers. They're pocketing a 10% commission whether you're making bank or barely breaking even. And of course, there's Bank of America and the rest of the squad raking in trillions off your leveraged mortgage. You know what this means? You have to make like 300% on the sale of your house just to break even, and that's before you even pay a realtor. It's a vicious cycle of fees, taxes, and interest that makes the whole idea of home ownership look like a trap. Unpredictability. The housing market is like a roller coaster that you did not sign up for. Sure, your house might appreciate a little over time, but the rate is seriously so underwhelming that when you stack it up against other investments, it's literally nothing. Since the 60s, residential real estate has only grown about 4% on average, while other investments, like the S&P 500, have been hitting around 10% per year. It's worth repeating. If you dropped $100 into real estate in 1960, it would only be worth just over $1,000 today, while the same amount in the stock market would have given you almost $30,000. Do you even realize the difference? Plus, we all remember the 2008 financial crisis, a brutal reminder of how quickly property values can nosedive. Overnight, many folks found themselves underwater with their mortgages staring at properties worth way less than what they had paid. Such kind of unpredictability is something no one wants to deal with, especially when it's your whole financial future on the line. The Grant Cardone touch. The well-known entrepreneur Grant Cardone dropped some truth bombs about this. A house is a terrible investment because you have to buy the house, because you have to lock into a 30-year loan, because you have to pay property taxes for 30 years that you have no control over, and you have to put insurance on that house. That's some savage truth right there. He pointed out that between interest, property taxes, and insurance, you have to make unrealistic returns on the sale of your house. Grant's message is loud and clear. The financial burden of home ownership is massive, and the amount of market risks, from fluctuating property values to sudden downturns, mean that you're essentially locked into a deal that's rigged against you from day one. Sure, if you need stability for your family or want the sense of belonging, buying might make sense. But if you're in it for the investment, think twice. Now that you know the truth, it's time to rethink your strategy. Smart money moves to create freedom, not just a big mortgage. So, what's your take? House or no house? Comment below, and make sure to subscribe to our channel so that you can stay in the loop and never miss out on any of our videos. Subscribe now! See you in the next video.